Well, speaking right now, we're getting ready to, is Treasury Secretary Tim Geithner. Again, efforts to get people to rework, modify their loans underway. Let's listen in.
Indeed, long before it, we warned about the dangers of predatory lending. When it became obvious to all of us that these mortgage malfeasance practices were dragging down the U.S. economy, we worked to offer solutions since day one. It is clear now to every economist certainly in the country, unless and until we stabilize home prices, this will continue to drag on our economy. It is also clear that that the single most critical step we need to make to stabilize home prices is to stop the bleeding and to prevent additional, what could be up to 10 million more foreclosures that are looming on the horizon. This will signal to the nation the economic downturn is ending. It is wise to start buying homes. It's smart to purchase from this high inventory that is now available. It's time to take advantage of low mortgage interest rates. It's time for investors and lenders to start investing and lending. And it's time for the home building industry to restart their engines. I'm honored to be here with HUD Secretary Donovan and Treasury Secretary Tim Geithner to announce further enhancements to President Obama's Making Home Affordable program. Making Home Affordable program is a tribute to Secretary Geithner and to Secretary Donovan and to President Obama because it represents the type of aggressive response that we needed from the beginning of the foreclosure crisis. I've been working closely with both of these cabinet members since they were appointed. I have found them refreshingly open and flexible. We may well indeed need that flexibility as we move forward and assess the effectiveness of making home affordable. More may be needed. We at NCRC look forward to working with Treasury, HUD, and the White House to do our part to making home affordable work and to help millions of working families remain in their homes or to have a responsible exit that causes the least amount of hardship on these families, on their communities, and to our national economy. Please join me in welcoming the secretaries, and I'd like to ask Secretary Geithner to speak first.
John, thanks for having us here today. I have great admiration for what you're doing, you and your colleagues are doing. We just had a very useful discussion with a number of counselors from this terrific organization, and they shared with us their experiences. And I think they speak for the country in many ways, because you see as unemployment rises and as America still face a deeply challenging set of problems, you're saying the rate of distress still growing in this country. And that's why it's so important that we do everything we can to try to get assistance to people that need it, make it more likely people to stay in their homes, take advantage of lower interest rates, help them make the transition to rental housing if they need to do that. On February 18th, the President unveiled what we call the Making Home Affordable program to help keep mortgage rates low, to help make it possible for people to refinance, and to help people stay in their homes. And 3 months later, I can just describe some of the areas where we've seen some progress. And let me just walk through some of the most important signs to date. First, in the American Reinvestment and Recovery Act, Congress made available a program to provide $6.5 billion in tax credits that could help up to 1.4 million Americans purchase their first home. And to date, as at this point, $3 billion of money have been made available already to help people benefit from that program. Working with the Federal Reserve, we the Treasury, working with the GSEs, have helped bring mortgage interest rates down to historic lows. And that's putting money in the hands of Americans in very significant magnitude. Refinancing applications have surged across the country since this program was announced. And again, millions of Americans today now have the chance to take advantage of lower interest rates through programs that were not available prior to this program being announced. You're seeing Fannie Mae and Freddie Mac process refinancing applications at very, very rapid pace. 14 servicers now, including the 5 largest servicers, have signed up for this very important loan modification program. And with these services participation, more than 75% of all mortgages in the country are now covered by this program. And as you saw, as you read today, more than more than 55,000 modification offers have now gone out to borrowers, and we're seeing the first signs of homeowners being able to take advantage of the lower monthly payments as this program makes possible. Now, this is just the beginning. It's an important beginning, but we're at the beginning of progress in these programs, and I want to underscore the President's commitment to doing what's necessary to make sure that these benefit as many Americans as they can. We're announcing 2 additional programs today. There are details in the fact sheets we let out, but let me just describe briefly what these 2 things do. The first is a short sale deed in lieu option that gives people options to avoid foreclosure with significant payments to help facilitate a transition. This is a very important complement to the broad suite of programs the President will be announcing together on the 18th. In addition to this, we're announcing today the details of additional incentives to help lenders, servicers participate in this program, to give them payments that would help mitigate some of the risks that past house price declines might reduce future payments. But this is the way to think about this is just an additional incentive for lenders and services to participate in these programs. Details in your fact sheets. There'll be details forthcoming as these programs are refined. These are just 2 additional next steps in this effort. I would underscore again that alongside these programs, in fact, before they were launched, we announced together with the Attorney General, with Secretary Donovan, a very important anti-fraud program. And I want to underscore again that we want to make sure we're very aggressive in preventing scam artists, others from taking advantage of homeowners that are facing the risk of losing their home, looking for assistance, need help, and we're going to be as aggressive as we can in trying to make sure people are not victimized by those practices with the assistance of the counselors here and around the country. Let me just end by complimenting Sean Donovan for all his work. He's doing a terrific job helping bring together all the resources of this government in a coordinated effort, and I think you're seeing from Sean a pragmatic, active, aggressive approach, and he's doing a terrific job. Sean.
Thank you, Tim. I do think our work together demonstrates the kind of partnership that this president has laid out across the entire government, that we can't work individually and solve this crisis. We must bring together active efforts around the housing market and more broadly to get credit flowing again to Americans, as well as use the Recovery Act to spur jobs. One of the things that we heard very clearly today in our discussions is that job loss is the primary driver today of new foreclosures, and that's why it's so critical that we think about these programs in an integrated way, that while we create or preserve 3.5 million jobs in the Recovery Act, we bring that together with the aggressive efforts under the Making Home Affordable plan, as well as our efforts led by Secretary Geithner to get credit moving again in this economy. And so thank you, Tim, for all your partnership on that. And thank you, John, for hosting us here today. Very, very valuable session. This is exactly what we need to be doing, not just partnering across agencies within this government, but also reaching out to our partners that are on the ground, helping folks connect to the Making Home Affordable plan and to actually help them stay in their homes. And that's why I'm so happy to be here today to talk about the real impact that Making Home Affordable is having on people's lives. The new policy details that Secretary Geithner just discussed on short sales and deed in lieu options, as well as on house price declines, will help homeowners out there who face imminent foreclosure and can't modify or refinance their loan through Making Home Affordable. These new options are a clear sign that the administration is continuing to innovate and find new ways to help more families through the President's Making Home Affordable plan. Thank you, John, for opening your doors today to us. Earlier this year, Secretary Geithner and I had the opportunity to meet with John to discuss NCRC's perspective on how we can work together to help families navigate these difficult times, and it's great to join together with him and NCRC's counselors again today. Involvement from community organizations like NCRC is absolutely critical to the success of Making Home Affordable. I can't stress enough more broadly how important our HUD-approved counseling agencies, of which NCRC is one, are to the success of Making Home Affordable and ultimately to helping keep Americans in their homes. The counselors that we spoke with today hear every day from families that need help navigating the complex refinancing or modification process and need a trusted place to turn when they face foreclosure. They are also on the front lines combating more aggressive and misleading marketing campaigns that promote risky loan products and foreclosure rescue scams that leave many families victim to an already difficult time. That's why HUD has requested a $100 million investment in our Housing Counseling Assistance Program in our proposed 2010 budget, an increase of $35 million or more than 50% over the level provided in the 2009 budget. This investment will help support the work of our 2,600 HUD-approved housing counselors across the nation, just like those at NCRC, who play a key role in ensuring that borrowers can take part in the modification and refinancing options made available through Making Home Affordable. It is our housing counselors who are on the ground and talk directly to borrowers, and it is our counselors who can disseminate information on the grassroots level. I'd now like to introduce you to two American homeowners whose lives have been positively impacted by the President's Making Home Affordable plan. With over 55,000 trial modifications underway, these are just two of the success stories that have come out of Making Home Affordable so far. Nicholas Tequete modified his mortgage through City Mortgage. Nicholas lives just outside of Reston, Virginia, with his wife and son, and his son is joining us here today, and he works 2 jobs to support his family. He is a sales assistant at a home improvement store and a deli chef at a grocery and market. Between both jobs, Nicholas works on average between 70 and 75 hours a week. Last fall, because of the economic downturn, both employees reduced his hours, which reduced his take-home pay. Nicholas confided in one of his friends that he wasn't making ends meet, and his friend told him about Making Home Affordable. At his friend's urging, Nicholas went to the website, one of the millions of Americans who have accessed the website to date. As of today, we have over 17.7 million page views on the website. And then he called City Mortgage to learn about Making Home Affordable and worked directly with representatives at City Mortgage to get his paperwork in order. With the help of City, Nicholas faxed in his documents, and he was qualified for a loan modification with relative ease. With this modification, he saves almost $600 per month, and his payment is now affordable. Thanks to Making Home Affordable, Nicholas's interest rate dropped from 6.5% to 2% for 5 years, and then will step up 1% per year until it reaches a market rate of 4.85%, a permanent cap. Nicholas's total annual savings for his first year under the loan modification program are over $7,000. Let me introduce Nicholas to say a few words about his experience.
Thank you, Mr. Secretary. He said in his statement that few words, but I think I have more than few. So you bear with me if I should take some few of your time.
That was Treasury Secretary Tim Geithner, Sean Donovan, Secretary of HUD, along with John Taylor, head of the National Community Reinvestment Coalition, on, again, moves that the government is making to increase these mortgage modifications. And John Taylor will be our guest in just a short while, but we want to bring you this breaking news. Moments ago, we brought you remarks from Treasury Secretary Tim Geithner and Housing and Urban Development Secretary Sean Donovan as they updated the Obama administration's Making Home Affordable program. Our next guest was also there. He is John Taylor, President and CEO of the National Community Reinvestment Coalition, and he's joining us with a first on Fox Business. John, it's great of you to be here. So there were 2 things that the secretaries rolled out today: this home price decline protection and these foreclosure alternatives to encourage short sales. But they talk about financial incentives to servicers and borrowers. How much money are we talking about, and are we talking about taxpayer dollars?
I'm sure they're talking about taxpayer dollars, but they haven't made the announcement yet. They haven't released the details. They're about to, on the kinds of incentives that are going to be put out there to work with these deed in lieu and short sales, and incent the services and the brokers to work with them, investors.
But do you
we're all waiting for the numbers.
John, but do you think that what the Making Home Affordable program will work better? Again, only on the modification side, which it was targeted 4 million homes, 55,000 homes so far. Yeah. Will it work?
Right. Yeah, I mean, I was encouraged by the numbers because we run a national program, and then we have affiliates around the country who run these counseling programs. And it's very difficult, and it has been very difficult to get services and banks really to work with you. Some are better than others, but it's a grinding out of numbers. And so to hear in the short period of time that they've had over 50,000 loans approved and then several 100,000 more in the pipeline through applications, what's been offered so far from the government, and you look at those numbers, we're all pretty encouraged. But I've been encouraging in my private meetings with the secretaries, both Geithner and Donovan, that they really keep abreast of how well and how effective this program is being, and they'd be willing to move, be flexible and apply other terms and conditions that might help make the program even more effective. What they announced today,
John,
if I may?
it's Brian
Yeah, please.
Sullivan. What
Hey, Brian.
happened here? I mean, you know, most of the people that you're seeing, what are they saying?
Yeah.
I mean, you got to have a job to be eligible,
Yeah.
right? So these are people who are
Right.
gainfully employed.
Right. Yeah.
Because when you lose your job, it doesn't really matter what your interest rate is. You're going to be hurting either way. So
Right.
what's happened here? Why do so many people need this help?
Well, first off, I mean, what clearly happened is we had this period of time where it was probably the darkest hour in the history of mortgage finance in our nation. Between 2003 to 2008, we just had some predatory lending practices that the regulators should have really stepped in.
So the person who borrowed the money has nothing to do with it.
No, they don't, because really what happened is
they don't. The person who borrowed money, a $500,000 house making $50,000 a year, whose fault was that?
Let me answer your question. The only thing, just to be very clear about this, the only thing that changed in our system of mortgage finance was the person sitting across the table from the borrower, who traditionally would have said, I'm not going to make this loan to you because I don't think you're going to be able to pay this long term. That changed to someone sitting there saying, I can make any loan to you. The broker or the lender, get a fee. They sell it to Wall Street, and so that, you know, the desire for people to be in home ownership or get a bigger house or whatever, that never changed. What did change is the malfeasance, and you may not want to believe, but that's
John.
I said that. Yes.
John,
I can't believe we got.
we have to go, John, because we're up against a hard break.
That's
John,
really disappointing.
will you please come back? Please come back.
Yes, of course.
Can everybody in America get a 2% mortgage, John? Everybody.
Yes, everybody who's struggling with their mortgage can.
Every American get a 2% mortgage?
If they need it.
I need it. I'm calling.
Frankly, by the way, you
2.5 minutes.
I just refinanced for 4+. I mean, so the rates are low. You can take advantage of the system.
Well, I'm happy. I'm waiting for the 2, John. Thank you.
Look, listen, we got 10 million foreclosures. We got to stop those because it's going to hurt all of us. You know that, right?
Of course. And if you knew my family's history, you'd know it a lot more than you think.
John.
Yeah, good. Okay, we're on the same page.
John, good to see you. John Taylor, you will be back. John Taylor, be well.
Thank you.
The head of the NCRC. We will be right back. Stay with us, everybody. It's Fox Business.